Hey everybody, John the Economist here with a hopefully brief market update. When I try to do these videos, I try to keep them under 10 minutes, but we will see there is much to talk about. So the main question I want to answer for this market update is is the bottom in? Is this trend reversal going to be sustained? Similar theme as last time, but obviously we have another week worth of context to provide. So taking a look at the stock market, right? We're still seeing a situation where the Dow could actually put in a higher high, right? Actually knock out this high and, climb above it. And that's a pretty decent sign of a reversal. Additionally, you're seeing the same trend on the lows, right? So, and who knows, maybe this comes down and puts in like yet another higher low before going and then actually putting in that true higher high, breaking the previous high, et cetera, et cetera. So those are all possibilities that could happen. But does that necessarily mean that we're in like a sustained reversal, or maybe that's just like a very nice, pretty relief rally that we're dealing with, right? It's all possible. So the main thing that I want to talk about with that is obviously we have our three conditions that we're using to identify when we might see a sustained bull market come out of this bear market. Personally, I still feel like this bear market's just kind of setting in. It's just kind of, still like really starting to enter like maybe a further downtrend or another accumulation phase. And the reason why I think that is because it really wasn't that long ago before we put in like a true, top. It was only what, 6 months ago now or 8 months ago? About, yeah. So like beginning of January to now August, right? So, when you look at some of these longer term bear markets, and obviously we can't just treat all markets the same, but when you think about some of these longer term bear markets, you have to consider okay, the dot com bubble took years and years and years to recover from, and the 2008 financial crisis took years and years and years to recover from. Even if we want to go back, because it's funny. The crypto market reminds me of the dot com bubble, but like the rest of the market just kind of reminds me of the super high inflationary period that we had in the 70s. And if I were to switch this to logarithmic, I apologize, so that we can actually get some of the trends going, right? Like even during this, high inflationary period that happened during the 70s and 80s, like, do you see a bull run here? I mean, I see recoveries from dips, but I don't really see like a true sustained, back to normal. You could technically consider this just like a giant accumulation range that, lasted for an incredibly long time. If you want to zoom in, and I can overlay the inflation rate on top of this. Right, there's your period of high inflation. And then you can see here, like inflation topping, market bottoming. Inflation topping, you still get a pretty rough market, and you have quite a while, years, in fact, before you're actually on a sustained trend upwards. So as far as stock market goes, like that's what I think we're more so in for more than anything else. So just something to be cognizant of is that okay, like is this bear market really only going to last 6 months? Like equities, especially tech stocks and fintech and things like that, bleeding the worst that they've ever bled in a very long time. If you exclude the COVID crash, and we're just going to be back to our regularly scheduled infinity bull market less than 6 months in. I'm not sure. There's some things to support that narrative. Don't get me wrong. I mean, commodities are starting to cool off a little bit. The housing market's definitely cooling off. Like some stocks are just completely decimated still. I mean, right? You still see a lot of these popular like blue chippy esque stocks just really struggling, but or had already gone down 60, 70, 80%. But does that mean the bottom's in? Does that mean that we're like back to a bull market? So one thing to consider, and we've been through this before. So those who have been following the channel know exactly what I'm going to say. Has inflation come down yet? No. If inflation has not come down, then the United States Federal Reserve is probably going to continue to raise interest rates. What is the United States Federal Reserve doing? They're continuing to raise interest rates. It's very likely, almost certain that they will be doing at least another 50 basis point interest rate increase by September or so. Okay, so liquidity is continuing to get sucked out of the markets. Inflation is still running pretty hot, and we have no reason to believe that it's on a sustained downtrend just yet. It might be starting to top out. We know that for sure. And the last thing, right? The dollar index, which still has yet to put in a lower low of any kind, right? We have nothing but higher highs and higher lows. So, you look at those three indicators, right? And Federal Reserve raising interest rates, inflation, the United States dollar currency index, and you think, okay, maybe risk on investments are not going to go into a bull market anytime soon. And it's until these three indicators start making their way down, federal funds rate can go sideways. But inflation and the dollar index need to start making their way down in a sustainable downtrend in order for us to think about bull markets and risk on assets again, right? So personally, I'm not convinced. I could be wrong. This could age poorly, but I think it's more likely that even if we do place a higher high here and maybe even, go for a little bit longer than that, I think at the end of the day, we're still probably just going to be accumulating or heading further down for months or years to come, right? I still think like time frame for this, like the earliest we potentially have the conditions to launch ourselves into yet another like sustained long-term bull run is probably a year or so. And that's like considering that's not saying like it's gonna like be at new all-time highs in a year or so. I'm saying that like we're finally in that uptrend that will lead us to those new all-time highs, right? Um, this is a patient game. If you're an investor, it's an incredibly impatient or a patient game. So you just need to know to just okay, like these are the conditions. Inflation's really bad. The economy doesn't look great. The Federal Reserve is very hawkish, so they're looking to raise interest rates, suck liquidity out of the market, slow down the growth of the economy a little bit. All of those things do not necessarily bode well for companies. And also, companies are missing earnings left and right. Like there's a lot of recessionary indicators. And one thing that I've heard is, oh, well, unemployment, hasn't gone up yet. So can we really call this a recession? It's important to remember that unemployment is more of a lagging indicator of a recession. What do I mean by that? Well, when companies miss earnings or they're not making, the same type of profits that they were a year ago, or, any of these number of factors, the first thing that those companies don't think is, oh, we missed earnings for one quarter, or we're, below our revenue or profit targets for one quarter. Let's slash our workforce, right? Might be seeing that in the crypto market because again, the crypto market's going through something that's more comparable to, I'd say, a dot-com bubble crash than like a recession. um but still, like that's not the first thing that anybody acts to do. It's horrible for morale. It's not great for any signs that there might be growth in the near future. So when people mention employment, saying, oh, we're not necessarily in an actual recession yet because unemployment hasn't gone up, I would take that with a grain of salt because employment is usually the last thing to start really indicating that we're in a recession, because people don't like to fire other people just because you miss earnings for one quarter or two quarters or whatever. So that's something to be aware of, that is not necessarily a good argument when saying, oh, everything's going to be fine and we're back in a bull market. It is important to remember that the stock market usually bottoms before the recession and the economy bottoms. And it's usually because people have priced in their expectations about the economy before the economy actually gets to that state. But like, that's a difference of, 3 to 6 months here. If the recession hasn't even truly started yet, that does not mean that the stock market has bottomed, unless you believe that the recession is only going to last 3 to 6 months, which in that case, I'm on board with the people that are saying don't call it a recession. But I just don't think we're there yet. I don't think that reality is totally settled in for a lot of people. You're starting to see the signs of it. You just got to be aware of it. And unemployment will eventually follow if people's house prices are down, if companies aren't turning profit anymore, if companies are going under. If any of those things are happening, employment is eventually going to follow that. I can promise you. It might be a rebalancing of the economy in a long-term healthy way, but that doesn't mean that short-term it can't hurt. And also, short-term it might last for a few years. So all things to consider. Um, quickly taking a look at Bitcoin, it's more of the same. People are talking about this potential, relief rally turning into another bull run. I think Bitcoin's accumulation phase has just started. Um, and I think even when the stocks are looking bullish, that Bitcoin still is probably going to have a decent amount of work to do. Once again, I could be wrong on that, but it's just like going to the daily chart, looking at the 200-day moving average, right? Like we got rejected off of it. And until we're above this, holding it as support and then moving up is when I'm saying, okay, Bitcoin bull market might happen. And that might not even be a Bitcoin market that will take us to new all-time highs. It just might be like something like the 2019 bull market where, I mean, this was absolutely 100% a bull market, right? So, um, all things worth considering. Again, like I'm not saying these aren't good levels to accumulate at. I'm not saying that you shouldn't be, applying a consistent strategy or whatever. I'm just simply saying that, like, say this relief rally is going to lead us into the next bull run that's going to lead us to new all-time highs that are going to last for a few years until we have another, bear market recession conversation. I wouldn't necessarily say is accurate, and I'd say it's, people that are saying such things you should be very cognizant of. So that's just my brief market update. So I'm gonna have a little bit more time next week to actually dedicate to some of this market related content. So what I'm actually going to do is like definitions on stuff, right? Because I know that I use a lot of jargon. I don't intend to, and I'm not trying to confuse people. I'm trying to educate people as much as possible. So if you guys don't know the phrases and the words that I'm using, that's not super helpful. So I'm hopefully going to do a video series breaking down like economics terms, breaking down finance terms, breaking down technical analysis terms, and just kind of having that in those three buckets so that when I'm speaking whatever alien language that I'm speaking, people can actually keep up all right. So until then, I will see you guys next time. Hopefully, this was somewhat helpful, and I will.